Today, let's dive into the latest financial performance of Skechers U.S.A. Inc., a brand that's become synonymous with comfort and style in the footwear industry. If you've ever slipped on a pair of their sneakers, you know they've carved out a significant niche in the market. Recently, Skechers released its 10Q report for the first quarter of 24, and the results are nothing short of impressive. First off, let's talk numbers. Skechers achieved record sales of $2.25 billion, which is a 12.5% increase compared to the same period last year. That's not just growth, that's a statement. The company's gross margins also improved, reaching 52.5%. When you see those kinds of figures, it's clear that Skechers is not just riding the wave. They're actively shaping it. Breaking it down further, we can see that their wholesale segment saw sales rise by 9.8% to $1.42 billion. This segment is crucial because it shows how well Skechers is performing in traditional retail outlets. Additionally, gross margins in this area improved to 44.7%, which is a positive indicator of operational efficiency. On the flip side, their direct-to-consumer segment experienced even more impressive growth, with sales jumping 17.3% to $829.9 million. However, it's worth noting that the gross margin here dipped slightly to 65.7%. While a decrease in margin might raise eyebrows, it's important to consider the broader context. This could be a strategic move to drive sales and expand market share. Now, let's discuss operating expenses. They increased by 16.9% to $882.8 million, with selling expenses up by 21.7%. This increase might seem concerning at first glance, but when you're growing as rapidly as Skechers, investing in marketing and administrative resources is often necessary. After all, you have to spend money to make money, right? What's more, the company reported net earnings attributable to Skechers U.S.A. Inc. of $206.6 million, marking a significant 28.8% rise from the previous year. That's a clear indication that their strategies are paying off. Cash flow is another critical area to consider. At the end of the quarter, Skechers had cash and cash equivalents totaling $1,020.5 million, along with unused credit capacity of $746.9 million. This solid cash position signals that the company is well prepared to meet its working capital needs and capital requirements over the next year. However, it's also worth mentioning that net cash used in operating activities was $37.6 million, a stark contrast to the net cash provided of $235.1 million for the same period last year. This shift could indicate increased investments in growth or changes in working capital management. Skechers is also making strategic moves to bolster its future. In the first quarter, they capitalized $57.1 million in capital expenditures and repurchased $60 million in common stock. These actions reflect a commitment to not only invest in their growth, especially in the direct-to-consumer space, but also to return value to shareholders. In response to this robust performance, Skechers shares moved up by 1.6%, now trading at $7. This uptick is a positive signal from the market, suggesting that investors are optimistic about the company's trajectory. So, what does this all mean for investors? Skechers is clearly positioning itself for sustained growth, leveraging both its wholesale and direct-to-consumer channels. As they continue to expand internationally and focus on strategic growth priorities, the potential for future gains remains strong. Whether you're a seasoned investor or just dipping your toes into the stock market, keeping an eye on companies like Skechers can provide valuable insights into market trends and consumer behavior. Stay tuned, because as we continue to track these developments, there's bound to be more excitement in the world of footwear and beyond.